The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you had a great weekend. Obviously, a lot more news coming down the pipe from China, and that's what seems to be the predicate of all the disturbances over this course of the global stock markets. And we're going to take a look at the Shanghai immediately based on that alone. And, it's not a pretty picture, but one of the things I want to say is, this is obviously Custer's last stance on our long-term inflection point, 2966, let's just call it 3,000. And, a lot of rhetoric out there, just talking about fundamentals for a second, which really bleeds into technicals. We're saying, oh, well, this is a rigged market and they're buying their own stocks and, all these articles are coming down the pipe. People are sending me, China's got 5.7 trillion in unfunded, blah, 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 and all this. But let's just go back to 2008, 2009 in the U.S. How did we fix our problem? Oh, my God, we bought our own treasuries. Who would have ever, people were throwing up their arms. So, I think we enabled a lot of people to think on that level. And obviously, it's the pot calling the kettle black if we're going to complain about the Chinese buying their own stock market instruments to try to fix things. It's really, in my opinion, it's, obviously it's a little bit different, but it's not far off. So keep that in mind. Bad situations can be mitigated sometimes by a rigged game, if you will. And I'm looking at the Shanghai basically on that level. If they're going to step in and kind of pull this mechanism, it didn't work out terribly bad for the U.S. stock market when we pulled the same stunt. So I'm not for that type of stunt, but it's you got to kind of put things into perspective, I think, at this stage. So 3,000 obviously had a little bit more downside movement already on the Shanghai and China. And there's other Chinese indices, Shenzhen and other things out there you can look at. But I'm just kind of, again, just focusing on one thing. We've only got about, 45, 50 minutes for a show, and we could cover all the Chinese instruments. And we can actually drill down into them based on looking at the scanner. But just to sum it up, 3,000 is that big support on the Shanghai. That's the bottom of our long-term profile. Here is our daily. And, seemingly is not a lot of end in sight for this right now. But, this thing went up like an internet or stock or a pump and dump penny stock. And things that go up like that, are going to end terribly. You don't know when they're going to end terribly. But, again, we're just coming back to some kind of normalcy right now. And that's the way I'm looking at it. Let's see here. Okay. All righty. So that being said, let's just go right into our treasuries. Let's take a look at the 10-year because these are the types of instruments we need to look at before we get into any type of stock plays or market movement type outlook. So here's the long term on the 10-year. We've reached some targets around 127.14 on the unfair lows here. In my opinion, the bonds and the notes should have acted much more violently on the upside, and that's something Tom and I were kind of, they're showing themselves. You always want to look for relative strength or relative weakness when it comes to trying to find anomalies to take advantage of as a trader. All right, you want to find things that are showing their hand. Well, the 10-year, in my opinion, with the non-event on going straight up based on the U.S. stock market pulling back, what have we pulled back now? How many percent? Over 8, maybe 9? Does anybody got a figure they can give me in the den? Bonds and notes should react a lot more on the upside here, and they're not doing it. So what are we doing with the notes? What's the future for them? In my opinion, you've got a chance to now short this instrument 127.14 stops above. And hopefully this thing, market will rally a little bit, get some sanity back to it, and the bonds and notes will sell off. And that's where, the good news is you can orient stops above that 127.14. I think we've had a decent little reversal action today already. What's your immediate targets? 126.23, 24 is going to be that initial target, and in my opinion, even lower, revisiting 126 even. So you got about a handle and a half you could possibly pull out of that particular scenario. But the good news is, again, the risk-reward scenario is really good on that particular trade, all things considered. Let's take a look at gold. This is something, again, kind of going through the motions this morning on the usual suspects. This is our big number here, 1104. We got away from that. We went above it last week and came back and closed within that 1104. And I don't exactly like how this is crowding this inflection point again. And going back in time, this is our long term on gold. Well, this is our February contract. Let me make sure we're on the right contract here. Yeah, February contract. So I don't like it. I don't like how it's kind of consolidating up here on the 1104. But again, I'm going to keep turning the wrench the same way and use that 1104 as a stock or an instrument that's been in a downtrend, a defined downtrend. It's just kind of poking its head up into an inflection point here that we've got to pay attention to on the long term, that 1104 area. And it is what it is. We're playing the odds. We're just not rolling the dice. Hey, we've got an opportunity. We know where to put the stops, just like on the S&Ps at 1954 that I was talking about on Friday. We're going to talk about that too, but that's why you got to put stops in. And you've also got to be willing to just spread the risk out. A lot of these instruments, you cannot completely get glued in and focus on them explicitly. You've got to, a data sample needs to be relatively large in mathematics to really pull a valid sample out when it comes to probabilities. If you're focusing on one instrument in a data sample, then you're playing with fire, put it that way, in my opinion. So let's take a look at silver really quick. It literally just popped its head above, this. Let me go to our long term really quick. I don't see any reason whatsoever to get excited about this. I don't see any basing action. I see every time we rally in silver, it's a chance to sell it until we're told differently and we have some technical damage. And what is that technical damage? That means closes above on the intermediate 1442.5, and that's just not happening. Look at the action on Friday. This is very, very bad for silver. There's not a lot of people that want to hang on to this trade if it does bounce. There's a lot of different ways to look at it, but the fact of the matter is it's a relatively weak instrument compared to gold, and I actually think gold is going to continue down. We're going to take a look at March beans really quick. We got about 10 seconds. This is something that uses 854 area to bounce a little bit. I hear the music. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We were finishing up with soybeans, but I want to show you I told you we were coming out with this imminently here. The charting feature and a new upgrade on the scanner, along with the videos I've actually already done, but I wanted to release all that at one time. We should be able to get this out tomorrow. Is what I'm thinking. Is what I'm hearing. Just had some little small things to keep popping up with these charts, but. This is weekly soybeans on the March contract, and as you can see, that line down below 854 is held, but I don't really like how this thing's kind of consolidated down here. We bounced once, twice, 3 times off of this, and we've kind of made lower highs each time, and I just don't like the way this is compressing down. To me, that means, that's definitely a line to pay attention to, but it's not the type of action you want to see. Literally getting away from these long-term inflection points and moving on. Here's the S&Ps. I've been showing E-signal all morning, but I just want you guys to see that, we do have some really cool charts in here. In my opinion, they're spot on. They're working very well, in my opinion. You've got everything you need, I think, in the scanner now to really kind of do what I do every morning, which may be considered a value or not. But we're looking at our 60-minute here. We're looking at our 4-hour on the S&Ps. In my opinion, I think the S&Ps may reverse a little bit today. Here's our daily situation. Here's our weekly. And you want to have been looking at these stocks that have hung in there, by the way. And what I want to do is basically kind of go in here to we've got a breakout section that's very, very limited. I will say that. But let's go back into our uptrend, just basic uptrend, not even a strong uptrend. You kind of really limited yourself, but like basic uptrend, you've got the Walmart still in here, the Southwestern Energies, the Public Storage PSA of the world. Let's just look at that really quick. These are stocks that have hung in there above profiles. Here's our weekly new profile here on PSA. This is something I'd actually, you probably got a little bit lower support area on that one that you could take advantage of. But if you look at Dollar Tree, these are all stocks that have, really, really hung in there. Here's Dollar Tree. There's a decent support around, there's 76.62, and I could blow these up so they're a little bit easier for you guys to see. Sorry about that. Let's see if we're doing anything pre-market here. Not yet. Okay. Let's see. Okay, let's take a look at some of the usual the FANG stocks, as Peak D would say. Let me get into Amazon. Where are we at here? Well, there we are. Okay. All right. So I want to kind of go to the weekly here first. If we can get on that. Here we go. All right. So obviously we pulled back pretty much to the tick to the bottom of our profile in the weekly, and that was what we talked about. It's a maximum buy point, and that's around 605. So let me just go to my e-signal here. Where's Amazon? Here we go. Getting old. All right, so let's just go to the e-signal chart for a second. It's a little more clear when it comes to just completely pinpointing something. So we reached a low last week of 605.21, and guess where that unfair low is? 605.44. All right, so that's a really nice weight, as Tucker coined it one time, back the truck up type situation. So Tucker is saying back the truck up on it. I'm just kidding. Here we here's where the breakdown really happened, where it's time to sit on the sidelines below 653. I've been hoping that this would happen for the XLY's shortability's sake, but we've hit the target on this. This is not showing pre-market. Pre-market we're 613. Remember, guys, if you've been so-called looking for a deal on Amazon, you've got a chance. This 605 area was, obviously kind of. I hate to say that's a deal after looking at this thing, but it is what it is. Okay, so let's also look at Facebook really quick. I promise you we're going to get to the S&Ps. Facebook, trading what? Pre-market 98. We talked about this. This is like an Amazon situation. This 100 general neighborhood up here. We obviously broke through there. We had a weekly close below. This is kind of the time to sit on the sidelines a little bit here. We could go lower. The market could drag it down. I was looking at it as like, probably not going to go below 100 on Facebook for a long time. And that was a support chance, but that was a little bit too much heat on Friday to take. So right now, what are you doing? You're looking for a traverse back up above 100 to get back in the game on this. And, we could rally back up into 100 and kind of use that as resistance. We're just going to have to pay attention to the broad market. But again, there's really no risk getting stopped out of something like that, taking a stab, and then waiting until we get back above it. I mean, it's a boring game to play, but it's a good game to play. All righty. Let's take a look at Netflix. This is one that's been on my radar screen because all right, so right now 112.40 pre-market. Let's go into our scanner for this one too. Let's see here. Facebook. There we go. All righty, so let's go into our chart. Not a lot of green shoots here. This is our weekly on Facebook. I'm sorry, we were looking at Netflix. God dang it. NFLX. Here we go. All right, so again, have stayed above profiles here. This is an amazing situation. Let's go into our weekly. This is kind of where we pull back and are looking at that top. You got an opportunity here. We talked about waiting patiently until we got into that area. Let's go back into our e-signal charts here for a second. And again, 109 stops below. We're trading like 112 this morning. I think the market could just kind of traverse up, even though some of the things that happened in Europe were reversals. Let's take a look. Let's take a look at the next one here. And then we're going to look at the FTSE. Google. All right, so Google, you've kind of in the middle of a long-term profile here. 695 would be a really good place to scoop this up. What do you do with it now? 721. I think this is a no trade. You're kind of in no man's land here, and you've got a big, violent, high-priced stock, and you need to really probably wait until we reach some major inflection points. There's a lot of noise on the lower-term time frames on this particular instrument. All right, let's take a look at what was the next level? I'm missing something here. We're going to have to hit that after break. Peak D. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's cold here in North Carolina. Finally. Well, somewhat cold. You guys up north, the Minnesota game. This is a mild spring day. Ooh, it's cold in Florida is what somebody's saying. I tell you what, let's take a look at the S&Ps. Now, you know, if you look at it in a pure sense relative to our breadth, you know, we crossed over on the second, and we really haven't looked back. Okay, so there's the, you know, the second we started going negative. Here's And we've had some overextensions here. I will admit that. And we tried to pick a battle based on that overextension around 1954 on Friday. That's what stops are for, folks. And that's just the way the ball bounces. Here's our weekly breath. Very similar situation around the first. And if you look back at our 60-minute, we really, even when we were kind of bouncing up the other day, we never really got off the floor on some of our stocks that wanted to trade above profiles, even on our very, very short-term 60-minute. I'm not trying to be a Monday morning quarterback. We're just constantly trying to play the odds. But right now, we've closed below this is the facts. We've closed below our 1954 area, which was our weekly unfair lows. A retest of that and breath staying negative would pretty much mean by default that we would need to be selling that. All right. So again, 54 is the big number from 54, is the big number for me. And right now this is our 240. We've got 54, 53, 54, and 57. Top of the profile on our 240 is 57. So when I go into my scanner and I go back to my futures section and I go into the chart, these are exactly the numbers that I just spoke of. So here's the inflection points. And again, this is something they're putting this in vertical format over here on our chart. No, you guys don't probably care about that right now, but this is just another little tweak we wanted to get done that we caught at the last minute. So here's the weekly, here's the daily, here's our 4 hour, and there's that 57 up there, 1957.62. So that 53, 54, 57, that's going to be big resistance for this instrument, and that's the way we're looking at it now. Do you buy it now? If you're going to buy it, you've got some big ranges without anything to really hang on to here. I mean, here's our E-signal charts. There's that 1907.75. That could be looked at as a fence, and that could be looked at as a waiting patiently until the market comes back to you. Remember, if you look at the 240s, we had the orange bar appear, new profile henceforth, and then you come back and almost retested that bottom of the profile, but you haven't really done it yet. So, can you just throw a dart at the board and start buying this thing? In my opinion, no. You've got to sit tight. So the 907 and the 1907, 1903 are for short-term guys are the bottoms of our 60-minute and 240 profile. Am I a big fan of selling this? No, not right now. I mean, we'd have to have a retracement back up into 1953, 54, 57, and then take a look at what the breath's doing. See if a lot of the stocks in the S&Ps are cooperating with this move, which they, last time, when we started breaking down our intermediate, we had a pretty good, move back up on, what is this, Friday, back above 60. A lot of the stocks in the S&P, I never saw the breath get back above, which was really, really concerning. I never saw the breath on our short term. Let's see, I think we got as high as 40% below, even as we were lurching up pretty high. I mean, it was a little depressing to watch that happen, actually. So, we want to see the breath coincide to some degree with that 53, 54, 57 area and kind of make a decision if we get up there on the short side. But right now, not a big fan of going short and using 1907 as a chance to try to buy some things on sale on a contra trade against this break that happened on Friday for short-term guys. Long-term guys, I think you got to wait and see if we retrace back up there and see what happens around 53, 54, 57, and I'm going to shut up now. All right. Okay, so we've covered a lot of the usual suspects except for crude oil. We want to start off the week and see what's going on here. This is what's going on here in the den. Okay. All right. So crude oil, we've talked about selling breakdowns and selling resistance. This is kind of a broken record here. 36.82 is that last breakdown on the weekly. That coincided to some degree with the daily unfair lows. I'm going to pull up my scanner. I'm going to pull up my crude oil in here. And this is what's going on. Just kind of can I say freaking? Kind of freaking ugly. So as we look at this, what do you do with crude oil? I mean, can you sell it down here? I don't see any reasons to take the trade off on the short side. Now people are talking about the $20 range. I mean, when they start forecasting like that, that can be an indicator in itself that, the world's coming to. I even heard somebody talking about the teens. Those are indicators in itself, folks, contra indicators. So there's no reason to take the short trade off right now. That would be a stop out for me above 33.89. So again, this thing's going to rattle around. There's going to be some people causing some volatility down here, but there's also some massive perceived global implications when it comes to economies, and also people racing to try to make money. I mean, it's a weird situation. I don't think people have necessarily backed off using crude oil, but it's a fundamental situation that's very interesting right now. Let's take a look at a couple other stocks I had written down for today. Let's take a look at Disney really quick. Seems like, Tom was talking about this. The stock was sick. I think he was talking about this around 115 actually. So we've had some resistance areas to sell around this, breakdowns to sell as this thing has kind of rolled over, and it's had some decent fundamental news. But you've got a big time target around 96.42, and you've got a chance to try to nibble on a possible reversal on Disney. But again, this is kind of a wait and see. There's nothing really to do with it right now. There's no new inflection points to pay attention to down here, and that 96.42 is going to be a massive deal when it comes to Disney. Let's take a look at BlackBerry. This is a company that I hung in there so long with, and it's just completely, this is, if you talk about bad management, this is like bad management 101. I don't have to tell you guys that. This is kind of old news, but 738, that's the targets on the downside right now on BlackBerry, and they're trying all kinds of innovative things. I just don't think any of them are going to work. So is it a buy? Can you buy it on sale down here? No, I think you wait till we get below 738 again, if you're not already in the short, and pound it from there. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. I took the scanner and I wanted to use a custom sort that we have in here, uptrend support. And, these are the theory here is, these are stocks that have kind of been in a defined uptrend by way of this wacky algorithm that we have going on here. But these are things that have kind of pulled back with the market, still stayed in a defined uptrend. And, if the market shows we're talking about a relative strength trading game again here. And this is what I've done a lot of these videos on, because I'm a huge fan of it and a big believer in it. So what I wanted to do is I wanted to find something after I did the custom sort, just click the button over here. I wanted to just sort my columns. I wanted to see things really, when it gets down to it, I wanted to see things that were, or instruments that were trading above weekly profile still, but actually pulling back into inflection points. So I've got 2 candidates that are fitting the bill here, ESS and PLD. All right. So I want to take a look at that, and maybe ZTS, but let's take a look at PLD, excuse me. Here we go. So again, this is a stock that's been kind of rattling around up here above profiles. Remember, these weekly profiles appearing below price action are relatively bullish, but it's telling me that we're getting right into the bottom showing on the scanner, a big inflection point that we've pulled back in a long-term uptrend, pulled back into some form of support. And the cool thing is with the scanner and being able to kind of find these things instead of having to surf a zillion instruments at the same time, is puts it on your radar screen. You can put it in your custom list, monitor how it works moving forward, just like the SWNs and the Walmarts of the world we've been talking about. And we'll cover those 2 stocks in a little bit. But the good news is you're able to play defense pretty easily and put that risk reward scenario in your favor. So your appetite for risk, and then you kind of are, trying to let this thing develop. And it's as long as we don't have any new profiles attempting to appear on this, and this sort excludes all that. So you won't see any of those type of situations. And if you do, it's actually going to be in your other sort here, which is, let's see, and I don't even have it up here. That's wild. So let me go to profit taking. And these are the ones that if you've been in these particular stocks, this peel back situation is saying it might be time to take a look at it. Might be a little bit of a target rich environment. So let's see here. And just to pick one out, let's look at MCD, McDonald's. Because it's got that appearing, even though this will be just by sake of what we just talked about, uptrend and pulling back to support, because of this yellow feature here, it's not going to be the case. So let's take a look at MCD. Yeah, Tucker, thank you for saying that. I personally need all the support I can get. Yeah. when I get up and look in the mirror, it's a frightful situation on a daily basis, Tucker. Here we go. So unfair highs 114.99, 115. So McDonald's is pulled back. Again, you've got this orange bar. That's a new profile attempting to appear. It's not more than likely the rosiest situation based on that alone. But I like McDonald's because you've got the unfair highs at 114.99. You've got the unfair lows at, what is this, 115.50. Market's been getting killed. This thing's relatively just pulled back into a dual time frame inflection point, kind of DMZ, if you will, there. So this is actually a decent looking stock. It's something you can get a trading bounce off of this. And this morning you've got 115.76. Again, the good news is you can orient these stops below 115, and it's a nice setup. I mean, this is one I've genuinely like to see. We're going to take a look at the XLY. We're going to okay. So this is one we're really pounding the desk about shorting into this 80.5, 81.5. A little bit of a scary trade. We talked about that ahead of time, and we talked about targets below are going to be like this 72 situation. Still standing by it. We're going to have some volatility along the way, but I think we could easily traverse the entire fair auction on this. We're opening up, it looks like, at 73.63 this morning. God, I saw somebody on Fox News. It was a guy they were interviewing, and he was in Brussels, and he was basically saying that Europe as we knew it is over. I mean, 30% of the population of Brussels alone is either Arabic or Muslim now. Again, nothing wrong with that, but to be politically correct. But it's amazing what's going on in Europe, and as we talk about that, that's not a good timing tool to trade the euro on. But I want to go in here to my Forex section. We hadn't talked about the euro in a while, but I want to pull up my charts. And, if you watch this show, I've been relatively bearish on this. The U.S. dollars, here's our weekly on the euro. Here's our hourly. So right now, I want to see this thing. Every time it gets below 109, I am getting extremely aggressive on the short side. And I'm orienting stops above that 109 because I don't want to not catch a big move down on this euro because, fundamentally speaking, it's ugly. I think they're kind of stuck in the mud for a long time. They're going to have to perform some new innovative measures to correct all the situations over there. And I think our dollar is going to get stronger. So all things considered, with the Fox News guy that kind of put another win on the board for me mentally, a lot of the technicals going on, I'm still a huge fan of shorting this instrument. That's the deal on the euro. So let's take a look at the Aussie dollar. This is something that kind of broke my heart, to be honest with you. I was looking for this to stay above this 71.69 area. That didn't happen. The only way I'm going to, and all things considered, China going to hell in a handbasket, the commodities world getting decimated. I'm not totally giving up on this. It's just that it had to do that empathetic, sympathetic move down. I'm wanting it to get back above 71.69, and then I'm going to want to really be long this. So it's a similar situation to the euro, except in a kind of a polar opposite way. And I still really like these two trades a lot, but the Aussie dollar is going to be a little bit of a wait and see to see if we can kind of poke our head back above where we need to be, instead of trying to play around with fire below these profiles on the long side. Remember, the general rule is, let's try to block out one side of the marketplace. Let's kind of determine if it's okay to be long, not okay to be short, or okay to be short, not okay to be long. And going back to the very, very general basics, that Aussie dollar is something you don't play around with on the long side yet. So, and we're looking at that as a very, as a long-term situation. All righty, let's go back into our ETF grid really quick here. This is one that, we've been talking about the XLU, the utilities. This is kind of the place to hide, the anti-sector, if you will. We got a break coming up. Jeez. Okay, so nothing's really escaped this recently on our short terms, even the XLU. But what we want to do when we come back is we want to look at the XLE, the energy stocks, and we're going to try to pick some possibilities here. We're going to drill down and we're going to try to find some colors that we can gravitate towards. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, welcome back to the show. We were going off on a tangent talking about Europe a while ago, and have you guys been watching the History Channel? I mean, they've got us shown, whether Hitler actually died in the bunker. And you had all the tunnel networks underneath the city that basically were attached to it. And man, interesting show. He single-handedly took down the ability to wear the little chopped off mustache too. Just other people had made it famous. Charlie Chaplin. Anybody else? I can't remember. But anyway, we're going to take a look at we're going to take a look at natural gas really quick. That was my attempt at being funny. Here we go. Let's take a look at natural gas. Had a question about this one, and I don't personally trade natural gas. It's something a little too. It's a tough market to trade, but it's a kind of a closed market. there's some serious things that happen with this particular market that are not exactly trader volume driven. It's a little too fundamentally driven for me a lot of times. So, but the technicals are, this is our weekly, this 2.303 combined with this 213, this is your major support. And this is what I would, if you're going to try to buy this right now, that I'd still have to wait until we come back and kiss this area, this general area, 2.303 for natural gas. That's my answer to that one. Yeah, Chaplin did have that mustache before Hitler. That's what I was saying. But Hitler just basically single-handedly dismantled the ability to wear that mustache. I certainly don't wear it because of that, and I would. Here we go. All right, we're going to take a look at something else that I used to trade a lot, now only trade from the short side, and IBM 136. We talked about this breaking down again, and it's not exactly relatively weak from a relative weak standpoint, acting that badly because the market's been coming down as we know. But that's your selling point again. It's kind of offered itself 136, a resistance area, to sell again on IBM. All right. Okay, guys, we're going to take a look at the scanner one more time here. And as we were looking at our grids across the globe, nothing has really escaped this. And when I'm sorry, we're going to go into our ETFs. We're going to look at the XLE. My fault. That's why we're up with the E-grid. So as we look at this, we kind of pointed out SWN the other day. There's that Southwestern. We're still trading above our weekly here. This is our. I'm going to go to my E-signal in just a second. So SWN, RRC, obviously looking extremely well. These are things to put on the radar screen. CNX, COG. Let's take a look at COG really quick. And we're going to take a look at FXY in just a second. So, some of these oil stocks really look like they're basing. I mean, crude oil's heading lower. A lot of these stocks, you got to look at this XLE as sometimes a leading indicator. And then you also need to drill down into the instruments. You always want to try to find the strongest ones to buy and the weakest ones to sell. COG scanners saying, you know what? Hey, I'm not exactly wanting to go down with the latest price in crude oil. And here's our daily. You got some support that you can lean on here around $16 on this. This is one of those stocks that's just come down from the stratosphere. And it might be worth taking a shot on some of these. Now, crude oil turns around, you could get 4 or 5 point move in a $50 stock. Guys, stay tuned. Larry's next.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.